Welcome to Drill Down Earnings. We have quarterly results out from the company called Applovin. You gotta love the name. We love the company. At least it's a really interesting company. I would call it one of the 50 most important companies in technology. That's why we cover it here. I'm Cory Johnson from Epistrophy Capital Research. This was Q1 earnings from this company, better than Wall Street expected. And this is a controversial business on Wall Street because there's a lot of concerns about self-dealing and are these numbers really real? There have been a lot of challenges to that among the world of short sellers, a world that I come from. But these numbers to me look pretty good. $1.5 billion in top line revenues, up 40% on a year-over-year basis. This business has been growing really fast for a really, really long time and getting more profitable. Their operating margins or EBIT margins are now at 45%. Really impressive. And it's driven by advertising in mobile video games. They've got some app revenue as well. They announced that they're going to sell their mobile app development business, but their advertising revenue just doing great guns, and it's led to some really stellar growth for the company overall. So when the numbers came out, of course, there's so much doubt about this company. Now, the short interest, I should say, is off this stock. It's only about 5% of the float right now. There was more short interest in the stock before, but when these numbers came out and they were so good, the stock shot straight up 14% and after I was trading, after a 294% rise in the previous year. So this one has just done great guns in the face of much doubt. But when we look at what's going on in this company, they're growing revenues by putting more ads into games, often ads that take gamers from one game to the next, but it seems to be working for them because they're collecting a lot of revenues in the process. And it puts them in a different position such that they're making news, not just for this very strong business that they've got selling ads within mobile games, but maybe they're going to sell more ads owning TikTok. Yeah, they've got a long shot bid in to buy TikTok with the notion that President Trump says and the Congress has demanded that China's going to be forced to sell this. President Trump has been delaying that sale, but the notion that there's going to be a sale announced sometime soon. TikTok is in the running for this. Adam Foroughi, the CEO, and he's been a guest on the Drill Down podcast in the past. Foroughi talking about this, saying, it's a long shot bid for them, but it's important and it could be a really important thing for them going forward. Duh. Here's what he had to say.
I don't want to spend too much time on TikTok, but just briefly, yes, we're going after world outside of China. We think the biggest priority is to solve national security concerns with regards to biases in the algo and data in the US, but that's important outside of China everywhere. And to do that, you really truly do have to have operational control. Unless the US app is a separate app from the rest of the world, which it cannot be, it would just deflate the app's productivity, then some company needs to have control to rewrite parts of the algo and to ensure that this thing complies with the standards around national security. We think our proposal is best suited to do that. In fact, we think we may be the only one who could do that with the knowledge that we have of models in the proposal we put forth. And on top of that, we think we would solve the present and be the best operator of this business long term through this type of partnership structure we propose. So I put the thoughts out there. I wanted people to have context. It's absolutely a long shot. We do go after long shots. That shouldn't be surprising to our shareholders at this point.
So national security concerns giving this company a chance, and they're taking a long shot bid here. Who knows? Maybe they get it. My guess is maybe that it'll be a combination of companies with Oracle somehow in there, maybe providing financing to make sure that TikTok continues to be hosted on Oracle servers. I do not own Applovin, sadly. I do own Oracle, full disclosure, but it's an interesting time for Applovin to be sure. What's it all mean? What's your big drill down earnings take? Well, I've got that for you. Just a second, of course, the one number that means a whole lot, the drill down earnings bite. Well, Applovin Q1 earnings, your essential summary over a controversial stock, $1.484 billion in revenues, very profitable, $1 billion in revenue, in adjusted EBITDA, very impressive for this company, and almost $600,000 $600 million in net income for this company. But 40% growth on a year-over-year basis, very impressive for this company. The drill down earnings bite, the one number that tells you a whole lot, is 71%. Advertising was up 71% on a year-over-year business for this bigger and stronger growing business. It may someday, maybe soon, buy TikTok. You have to check that out on our full YouTube hit here covering Applovin earnings. Thanks for checking us out. I'm Cory Johnson.